gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, defer millions of dollars of capital gains tax, diversify your wealth, and buy at optimal timing. So you can create and preserve more wealth or help your clients, friends, and family do the same. My name is Brett Swartz, and each episode I'm joined by some of the best real estate and financial and wealth minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming expert CRE secrets as well. Appreciate everyone listening out there. Hey, I'm excited about our next guest. He's out of the Toronto, Canada area. He's a visionary investor who pioneered the industry-breaking method of investing called Asset Revesting. He introduced this innovative approach in his latest book, Asset Revesting: How to Exclusively Hold Assets Rising in Value, Profit During Bear Markets, and Continue Building Wealth in Retirement. His journey in the financial world began in 1997, and using his innate talent for trading and risk management, he has earned enough money to pay for his final year of college when he was younger. And then he earned a business diploma in operations management. He then transitioned to a full-time entrepreneur and trader, achieving financial freedom in his 20s and so much more. Please welcome to the show, Chris Vermeulen. Chris, how are you doing?
Yeah, I'm great, Brett. How are you?
I'm great. For our listeners to get to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. Yeah. Well, my focus is grew up in an entrepreneur family, and I kind of have the entrepreneur bug. I love to create, build, make things happen. And I got hooked into stock trading in high school. There was a stock market challenge, and it kind of got my feet wet. Playing with fake money. We made like $85,000 in a semester. And, that back then it was like open a newspaper. There's 1,000 tickers in there. You just pick one. And that's how I kind of got hooked into that space. And I was underage at that time, so I couldn't trade, but I started to follow it. It became my passion, my game, my hobby, my sport, everything. And I've been doing it for over 25 years. I live and breathe it. It's all I do. I use it to invest my own capital. And I just, I'm into all kinds of different assets as well, because I believe, as we're going to talk about today, a lot of people don't realize what diversification really is. So I diversify in a lot of different asset classes, but a lot of people don't. And they believe diversification in the stock market is diversification, but it's not. So we'll probably go into detail on the different assets and why I don't believe in diversification, which that most people think or that they use, but there's a different way to diversify and be able to take advantage of the markets. But from a high level, I'm a technical trader, meaning I follow price charts. I don't look at the news, fundamentals. I just follow price. And as an investor, we always want price to move in the favor that we're positioned for. And it really doesn't matter what the news is. And news is unpredictable. So I just follow price. And if it's not going in our favor, we move aside, we find a different asset that is going up, and we reinvest our capital into that new asset class.
Fantastic. And by the way, you can learn more about Chris by going to thetechnicaltraders.com. That's thetechnicaltraders.com. Love all of that, Chris. Let's dive right into the show, which is building wealth using asset revesting. So, Chris, what is the number one secret to building wealth using asset revesting?
Well, yeah, to bring it down from a high level. So pretty much everyone does one or two of the most popular types of trading and investing methods. They either do one, they do the buy and hold. You do your stock bond portfolio split, you park it, you leave it forever. That is a very risky way, especially if you're in the later stages. If you're close to retirement or retired, it is a great way to have very low average income, because you're going to have some assets that are doing well, but other ones that are tanking. And then when you blend those together, you end up with a really average return. And that's what the average buy and hold has. You never see a buy and hold investor retire 20 or 30 years younger, sooner. It takes time to make money that way. And it is a roller coaster ride. You'll go decades sometimes without really generating any real return if we have a multi-year correction or something like that. The other extreme are the active traders. And there are numerous studies across North America, Japan, Taiwan, Brazil, that show that if you're an active trader and you trade your money for more than 300 days, even during a bull market, 97% of active traders lose money. Now, I've been in the trading newsletter industry for over 25 years, and it is a rotating door. It is definitely difficult. People are struggling with their emotions. And so either one of those is very dangerous. They're high risk, and you either don't make much money, it takes you forever, or you lose it trying to make high returns. And so what asset revesting is kind of right in the middle. So the strategy that I deploy, we look at different asset classes and we reinvest our capital only into one asset at a time. So, I mean, there's a lot of things we could crack into here, but long story short is the stock market is one asset class. It doesn't matter if you own 400 stocks, you have ETFs in all kinds of sectors. If you own a stock, it's really just one asset class. The stock market is one asset. Bonds is another asset. Real estate is another. Startup. There's a lot of different types of assets. But what we do, or what I focus on here, is if the stock market is favorable, then we want to put our money into the stock market. If it's not favorable, we want to move to a different asset that is going to go up and benefit while the stock market is out of favor. And I do this with what I call an asset hierarchy. And so at the top of our hierarchy is always going to be the most volatile asset. Now, anyone can create an asset strategy around the assets that you like. There's people who are into the precious metals and currencies or cryptos or whatever. The one that I stick with, my asset hierarchy, for example, is the stock indexes. US stock indexes are the top. They're the most volatile, the most stable still. They have lots of liquidity. And if they're in favor, we want our money to be in there because we can make some good returns very quickly. But if the stock market's not favorable, then we want to go and look at treasury bonds. And if bonds aren't favorable, then we actually go and we look at the US dollar index. And if the dollar index isn't favorable, we move down to literally just an interest earning, more or less sitting on the sidelines in cash, collecting interest each day while we wait for an asset to give us a new signal. And what's really important about this is as the stock market goes out of favor and we move down that hierarchy, each asset class is a slower and slower moving asset. So typically, as the markets get more out of control, we're moving lower on that hierarchy to slower moving assets. And so our money is being a lot more safe and has a lot less volatility when everything else is going haywire. So it's really important to move away from volatility. And most people do the exact opposite. When there's a lot of volatility, prices rallying or falling, they tend to move into options. They tend to use leveraged ETFs and try and take advantage of picking bottoms or trying to profit from falling prices. And it's really the wrong direction you want to go. When things are volatile, you want to step back, let the markets reset. And then once a new trend is in place by following the price action, then we move into whichever asset has kind of got the strongest trend on our hierarchy. That's kind of it in a nutshell.
Okay, that's amazing. By the way, it means I need to get the book because that was a big nutshell, but it was a good nutshell. By the way, you're talking about Chris Vermeulen, and it's spelled Vermeulen. In case you're not watching on YouTube, if you're watching on YouTube, you can see it on the sticker here, and it's thetechnicaltraders.com. Thetechnicaltraders.com. So, although you're located in Toronto, you serve clients in 80 different countries, mostly in the U.S. Let's, in case you're wondering if you live in the US, where most of our listeners do, Chris can still help you out. Chris, what's the number two question? What's the number two secret to building wealth using asset revesting?
Well, it really comes down to risk and position management. And this is what most people really lack is, a lot of things tie in when it comes to the stock market. The stock market has a way of just getting its hook sunken into you in terms of your emotions. And a lot of people's emotions take over, and then your risk management goes out the window because you're like, well, I just got it. Now it's tanking. I still like it. I'm going to hold on to it. Or people don't want to be proven wrong. If a stop gets hit, they're like, I'll just stay in there. Or if it's making money, and this is what hurts people a lot, is if something's making money, they don't actually start taking profits out and locking in gains and raising their stops, which is, if it turns around, you want to make sure you get out. Problem is, human psychology is you don't want to get out of something that's winning. And you don't want to get out of a loser because then you're proven to be wrong. So that's what happens to the average investor and why they end up buying low buying high and selling low eventually when they can't take the pain anymore. And it comes down to managing your position sizing and having entries, targets, and stops in place and following them. So, for example, when I was 16 years old, my mom dropped me off at the Collingwood Airport, which is where I'm from, and I got my pilot's license. And I remember the day she dropped me off, my instructor said, hey, go to the plane. I'll meet you there. You're doing your solo today. And I just remember my heart stopping, going, oh my gosh, I have to go flying on my own. This is the big day. And long story short, I get to the runway, I take off, I'm past the airport, and suddenly my emotions are flying high. I'm all over the place, but the training kicked back in. And what did I do? I put my hand on my leg, on my checklist. I look down and I just start working through that checklist at a time when I could not think straight. I was scared. I was excited. It was an unbelievable moment. I work myself down this checklist. I do the circuit, I land, I pull off. And before I know it, at the age of 16, I remember sitting on the runway going, I cannot believe I just flew a plane and I didn't crash and burn. And it was all because I followed a system. And so at the age of 16, it's also the year that I got hooked onto the stock market. I systemize everything in my life now. Everything has got processes, and you need to create a process. I actually have a course on this. If you try to create a process, you're going to realize all the areas and the things you're missing that you don't have answers to. And by creating a checklist is how you actually create your strategy, because a lot of people think they know what they're doing and they say, I've got this strategy, I do this. But if you start grilling them and saying, what do you do in this scenario? What do you do in this scenario? They're going to realize how many voids and loopholes there are that they're not covered. So this is the second secret, is creating a strategy, systemizing it, following the strategy, and making sure you manage those positions, or else, as we know, investments, if they're not managed, they can derail and they can set you back years or decades. So.
Okay, that's fantastic. I love that. I've heard a saying that momentum is greater than the sum total of all the leadership, strategy, and resources combined. And so the question is, how do you activate momentum and how do you sustain it? Well, part of how you sustain it is systems. Right? Systems and processes, like you're saying, and that's what helps to sustain it. Igniting it takes, like vision, like clear vision on where you're going. Right. And then, getting it going takes some belief, like you have a clear, belief on where you're going, but then that system is what's going to sustain it. So I love the way you put that. It helps to take some of the emotions out of it. Chris, what is the number 3 secret to building wealth using asset revesting?
The third secret, I think it has to do with understanding who you are, your personality types. So, for example, a lot of people never ever think about this. And have you ever heard of the Myers-Briggs test?
Yes.
So I did an article on this. I talked about it a long time ago, but I think everybody should do the Myers-Briggs. You do the quick test. It tells you what personality type you are. And I did a research report on it. There's it's like 16 personality types. I think it's 13 out of the 16 personality types don't bode well for people managing their money. They become very emotional. They're sensing individuals. They're feeling individuals. They fall victim to emotions taking over. And even if you're a really dedicated expert in your field, it could be a doctor, a lawyer, somebody who you think would be amazing at trading in the markets, when they get to the markets, they fall apart and they lose a fortune. And it's because the emotions creep into things and they don't understand how their brain processes these emotions. It's a very different game. And so if you do this test and you realize the personality type you are, then you can figure out how your brain perceives and how it feels and how it reacts to market conditions. And to me, there's kind of 3 different types of personalities in terms of investors in the stock market. There's people who, for example, I'm an INTJ, so I'm like a introverted individual, but I'm very focused. My symbol is like I'm a scientist. So I love numbers. I like systemizing. I like testing. I like all of that stuff. So somebody like me, I can go and do this on my own. I create a system, I follow it. The more you follow it, the more comfortable, the more you believe in it. And then you just run the system and you just follow through. No matter how you feel, you just do what it says. Then there's another group of individuals that are pretty good. They just need a helping hand. They need signals to follow. They need a little bit of guidance, but they can execute the trades themselves. And then there's another group of individuals who are just way too emotional and they just need it done for them. And that's where a lot of people go to an advisor or have an auto trading strategy, something like that. So you need to figure out if you can follow through on trading or investing. So for example, if you have an investing signal from something, whatever you're interested in, but you don't pull the trigger, you're gun shy, you come up with excuses, you start looking at other people's opinions, you start to get mixed feelings. if you have that personality type, then you kind of almost need it done for you, because it's going to cause major problems. So knowing who you are and what level of expertise you need to help you navigate the markets. If you have one of these 13 personality types that don't bode well, you can still do exceptionally well in the market. You can do just as well as anyone with a different type of personality that might favor it, if you just have the proper support to guide you. So it's knowing who you are, really.
Fantastic. You said it very well. In understanding your personality, Myers-Briggs, and then understanding your investment personality is kind of how that all bridges, it sounds like. By the way, Chris Vermeulen, you can learn more about Chris by going and buying his book and or going to thetechnicaltraders.com. His book is called Assets Reinvesting, right? Asset Reinvesting. Chris, tell us more about the book and or anything else that I should be asking that I haven't already asked you.
Yeah, sure. Well, asset revesting, I like to try and give a visual of how I see the markets. So I'm like a kiteboarder, surfer. I live on the water. I love the water. So a lot of people don't realize, I like to look at the stock market like the ocean. So as we know, if a tide is going up, a tide lifts all boats. As the tide's going down, most boats go down with it. The stock market is the same. If we're in a major bull market, most stocks are going to go up. And that's why they're all kind of grouped in as the stocks are one asset class. Now, what asset revesting, the way I see it, is just like if you're on a coastline and there's surfers out floating past the break. What are the surfers doing? They're just floating out there. They're waiting patiently for a new set of waves. And the stock markets, there are lots of moving parts. There's lots of different asset classes among the investment world. If one asset is going down, that money's coming out of that asset and it's going somewhere else. And so what asset revesting is we kind of float there safely, earning interest on the sidelines in cash until we see a beautiful set of waves coming. And then we pick one of those assets that's on our list that has clean momentum. We can see lots of power behind it. We can see a big trend starting, and we jump on and we catch that wave and we ride that trend, because we're more or less a trend following strategy. We find something trending up, we get on it. And the nice thing about a strong wave and seeing the momentum, as you talked about, because momentum is very, very powerful. Once that momentum starts to fade on a wave, you can tell when to carve off a wave and let it curl and crash. That's the nice thing about the stock market. When you find a nice wave, a momentum, you can also find out and identify when it's starting to lose speed. So we can start to trim off our profits. We can start to move away and go look for, or wait for another set of assets. And we sit in cash sometimes 30 to 40% of the year, just collecting daily interest until there's another wave. And we don't hold anything going down. We avoid bear markets. In fact, we profit pretty well during market corrections. 2022, the stock market was down. Well, the US dollar had one of the strongest rally years that it's had in decades. So we can just move to a very slow asset class that goes up almost every week while everything else is falling apart. And that's the nice thing about it, is we can just walk around this market and just step into assets that have a nice clean trend. And when times are volatile, we go to something that moves really slow, but we can keep pulling money out. And that's the whole point of asset revesting, is if it's not good, just don't be in it. And that's how we avoid a lot of chaos and a lot of emotions in the market, by not being involved when it's an emotional time.
I absolutely love it. I grew up in California, and so everyone just assumed I surfed because I was in California. And then I actually moved to San Diego, and my first dorm room was on the ocean, so we surfed a little bit there. All my friends surfed. I played basketball as my main focus. But the point of that is so true, right? The understanding the overall market, when to catch the wave, when to bring the momentum, when to carve out, hiring the who, not being the how. Someone who, fell in love with this at a young age. I can't see a better person to help with this, thetechnicaltraders.com, everybody. Really cool stuff. That being said, Chris, I want to shift to capital gains tax, right? Because guess what? I mean, you make all this money, but then you have to pay all the tax. We like to say, it's not just about a cash flow, it's about tax flow, right? And taxes are expensive. In fact, let's say our biggest expense in our life, right? And that's second. Number one is the things you don't know is more expensive than anything else. But that being said, what would you say is the biggest frustration when it comes to building a capital gains tax exit plan as it pertains to like public stocks or real estate or business sales? And you have clients that are facing these massive, 10, 20, 50, $100 million exits. They have all this huge tax, and they also want to diversify that wealth and invest, into maybe some liquid investments or just really sit on the sidelines and wait like you're talking about until deals make sense. Talk about some of the challenges that people face when they're trying to exit these assets.
Yeah, to be honest, this is way outside my realm. I have a good lawyer, a good accountant, and they figure out all that stuff to do. So, I mean, this is your expertise, but here you probably might not even agree with this. But my dad always said this. He told me this when I was younger, and it just stuck with me. He's always like, if you're paying taxes, you're making money. So, and he's like, you're gonna have to pay them no matter what. Although you could argue that, but anyways, all I do is I find investments. I make as much money as I possibly can. And the accountants and the lawyers say, this is how you have to structure this purchase and this and move your money. And, as for a big exit, I mean, it's a huge deal. Canada is probably similar to the States, but I definitely know our tax system is still quite a bit different. But you do need to hire a pro. And there is a lot of paperwork for a big exit to shuffle money and work it out of a company so that it's not all stuck in there. And even to sell your companies, because if you sell a company in Canada, you can sell a certain amount without any taxes, but you can't have a certain amount of cash to income ratio, or else you don't get it. So, I mean, the whole tax thing is super important. It's kind of over my head. I just do what I'm told to do and focus on, find those investments, get it structured, set up properly, and then I just trade or invest or buy the properties, whatever it is that we're doing. But yeah, I can't give you a whole lot of help there.
Good.
That's not
It's
my
good,
expertise.
Chris. It's all right. You got to know your lane, right? Know your expertise. So in case you are wondering, we have ways to defer capital gains taxes and eliminate estate tax for those that are listening, maybe even Chris. And what we're finding is the largest wealth transfer in the history of the planet's happening, and it's about $84 trillion is the estimate, according to some banks and Marcus and Millichap, over the next 20 years, known as the silver tsunami. We call it the reverse Tea Party because either it's going to be taxed by the government and it's gone forever, and or it's going to be in the hands of the people because they use legal tax means to defer the tax or eliminate the estate tax. So there's a couple stats. There's 10,000 baby boomers every single day in America turning 65. There's 77 million baby boomers in the US alone. And again, about $84 trillion worth of wealth across that major generation. I don't think it's just America, but it's the total. It's just a massive amount of wealth. Mm-hmm. And it's going to transfer. And the question is it going to be taxed, or is it going to be, maybe deferred or more tax efficient? So there's a strategy called a deferred sales trust. In fact, we wrote a book on it. Kevin Harrington from Shark Tank's in the book, which is pretty cool. And it's called Building a Capital Gains Tax Exit Plan. And it's essentially that, understanding the strategy, the team, which you need to build it. But what's cool about it is then you can invest back into things at optimal timing. And what I love about your strategy is exactly what we practice. We call it optimal timing, right? Which is sit on the sidelines debt-free until the deals make sense, and then buy back into real estate with good debt, or at least decent debt when prices actually adjust, versus doing this 1031 exchange and overpaying for a property with bad debt, right? Let the tax tail wag the investment dog. And so it's literally looking at the fundamentals of the marketplace, and it's investing when it makes sense. But the biggest challenge for people when real estate or businesses is illiquid assets. So they're not very nimble to exit. This is where the DST creates that, we call it like a time machine, right? Where all of a sudden it unlocks the time constraints while still deferring the tax. And that to us is the single time horizon. And you probably would agree is the single most important, fundamental to investing. What is your time horizon? Of course, what's your risk tolerance? And then being able to invest when the time makes sense. Not only that, once you're in this deferred sales trust, you can invest into multiple asset classes, all tax deferred at any time. So you're not stuck to just one asset class.
Yeah, that's pretty
right?
sweet. Yeah.
And so you can go into real estate, you can go into business, you can go into stock market, you can go into cryptocurrency, you can go into lending, you can do ground up development. And so all that being said, I'm curious, I know you're not a tax or legal professional, but unlocking that freedom to do that, what do you think that means to someone like yourself, who someone might be selling a $100 million business or real estate and wants to invest with you?
Oh, it's priceless. I mean, to be able to do all that stuff is absolutely amazing. And one way that to kind of loop this back to asset revesting is, for example, as you were saying, like there's a time constraint, people get locked in and they get stuck in an asset. The way I see, buy and hold investors, for example, say if you're 55 or 65 and you have stocks and bonds in a buy and hold portfolio. Well, if we go into a big market correction that could take 5, 10, 15 years to recover, believe it or not, the markets are setting up very similar to a 2000 bubble. It took 12 years for the stock market to come back. That is a long time for an investor to be underwater with their accounts, big drawdowns, meaning They've lost 30, 40, 50% or more, and they have to withdraw money to live, subsidize their retirement, and they're stuck in this asset. What asset revesting does, especially if you start at a younger age, is because you're constantly just moving to something going up. Instead of delaying yourself, like we're all going to go through 2 or 3 major bear markets. They all last 5 to 10 or so years. If you do the old style investing strategy and you're stuck in an investment, you're wasting 20 or 30 years of your lifestyle. And the problem is we can't get time back. And so if we can find a way to defer taxes, make money consistently, and not have to have these big periods where we're stuck in an investment, I mean, it's night and day difference. I mean, the most valuable thing we have is time, and every day it goes and it gets shorter and shorter. We can always make money back, but you definitely don't want to waste time if there's tools and strategies to get around that.
Absolutely. Speaking of that, I'm totally out of time. I'm actually over on my appointment, Chris. I want to thank you for being on the show. For our listeners who want to get in touch with you, what's the best place for them to find you?
They can go to thetechnicaltraders.com and send us an email, and I'll be happy to answer any questions you guys have.
Absolutely amazing. Hey, I want to thank all of our listeners for listening to the episode of the Capital Gains Tax News Podcast, also streaming expert CRE secrets. Remember to plan ahead and hire the right people like the Chris's to help you build wealth, especially when it comes to technical trading. And we would love the opportunity also to serve you if you're selling an asset worth $1 million and has $1 million net proceeds, $1 million gain or more, and you're struggling with capital gains tax or estate tax, and you want to diversify, you want to invest, you want to practice all the things you've been talking about today. Just go to capitalgainstaxsolutions.com to start your exit plan. I so appreciate everyone out there.